Hello friends, welcome to the Mantri series of BFM. In Mantri series, as you know, we are covering all the numericals, objective questions, case studies for all the subjects of CIB, compulsory ones, all of them. So, follow the series till the end, share it with your friends, share it on all your social media platforms, like the channel, subscribe to the channel, click on the bell icon. Today we'll be dealing with PYQs, means previous year questions. So, what will we be dealing in? Many numericals. Starting from this, many numericals we'll be covering. So, watch the video till the end. Share it with your friends, like the video, subscribe to the channel. A doubtful asset for more than 2 years account has a balance of rupees 9 lakhs with a security of 5 lakhs. The account has CGT-MSE cover, guarantee cover of 75%. What is the amount of the provision? Think everyone. Think of it. What is the answer? Just think of it. Everyone try to give the answer as much as possible. I'll show you. See this. We'll first solve this. Okay. What is it? Doubtful for more than 2 years. It's a doubtful loan. So if it's a doubtful loan, what is the provisioning for doubtful loan? And that also for more than 2 years. So it will come under which category? It will come under D2 category, doubtful 2. See this, substandard, D1, D2 and loss. Right? This is a general classification. Substandard, D1, D2 and loss. Okay. So here what are you doing? You are having substandard is for what period? Substandard is for what period? Up to 1 year. 1 year. Doubtful is again for 1 year. Doubtful 2 is for 2 years. So what is it given? Doubtful for more than 2 years. So it is in the doubtful category for more than 2 years. So where will it be? See, total doubtful is for what? 1 year and 2 years, 3 years. So total doubtful is for 3 years. So it's told it's in doubtful category for more than 2 years. So it will be what? Doubtful 1 is gone. So it will be in doubtful 2 category. So now I am in doubtful 2 category. What is the provisioning for doubtful 2? D2. What is the provisioning for D2? D2 provisioning equals to 40% for secured and 100% for unsecured, right? 40% for secured and 100% for unsecured. Got it? So now what will we do? 40 for secured, 100 for unsecured. So now let's divide this. 9 lakhs is the total loan amount. Out of this, 5 lakhs is the security. 5 lakhs. So secured is 5 lakhs. So let's divide this. Secured and unsecured. Secured is what? 5 lakhs. Unsecured is 4 lakhs. So what is the provision for 5 lakhs? 40%. 40% into 5 lakhs. So that is simply 2 lakhs. So 2 lakhs is the provision. Provision is 2 lakhs. 5 lakhs into 40%. This 40%. This you will multiply it over here. Okay. What about this unsecured? You will multiply with 100. But there is a problem now. What is the problem? CGT-MSE guarantee cover is for 75%. Now this CGT-MSE guarantee cover is given the government of India, central government. And MSE means micro and small enterprises. So CGT-MSE guarantee is always given to those banks who are the members of CGT-MSE, not to every bank. So now this is 75%. This is always given for the unsecured portion, never for the secured portion. So whatever is secured, leave it. Unsecured portion is 4 lakhs. 75% out of that is insured. So do this. So 4 lakhs equals to what? 3 lakhs plus 1 lakh. Because 75% of 4 lakhs is 3 lakhs and this remaining is 1 lakh. So this is already insured. CG TMSE. So no insurance, no provision is required for this. This already you have insured. What about this 1 lakh? This 1 lakh is totally unsecured. So if this 1 lakh is totally unsecured, what do you mean by this? You will require 100% provision. So here I will make a provision of complete 1 lakh. So what is my total provision now? 2 lakh over here and 1 lakh over here. So my total provision becomes 2 plus 1, 3 lakh. My total provision becomes 3 lakh. Got it, everyone? Clear this concept? Very important, very simple. Okay? Got it, everyone? Clear? See the substandard, doubtful 1, doubtful 2, you must be very clear in it. Okay, in the logic of this. Chalo, let's move on to the next one. A bank is considering a commercial loan of INR 10 crores. Given parameters, interest rate on the loan is 10% per annum. Operating expenses related to the loan are INR 20 lakhs per annum. Probability of default is 3% per annum. Loss given default is 50%. Economic capital is 12% of the loan amount. Risk-free rate is 5%. The RAROC for this commercial loan is if such numericals, imagine if this numerical comes in the exam and you don't know. Imagine you have not attended this session, you don't know. What will happen? Imagine you will leave the 5 marks. You will actually leave the 5 marks. Okay, you will say that nahi hota bhai, nahi hota, chhod do. Okay. Firstly, we need to understand the terms in these. Okay. What are the important terms in this? So, whatever are easy ones, I'll skip that. Interest rate on loan, you know it. So, we'll skip it. Operating expenses, that also you know it. Operating means what? Your salaries, your this maintenance cost, okay, all these things, that you know it, skip. Probability of default. Now, these terms are important. What is PD? Probability of default. Probability of default means what are the chances of this loan getting default? How will you know this? Excuse me. How will you know this? Probability of default. See what you have to do. How does the bank calculate the probability of default? It takes the data, back testing. It takes the data of past 10 years. What was the loan size and what was the NPS? Now this it does for every sector. Means housing loans, how many loans were given in last 10 years per year and what is the NPA? Commercial loans, how many loans were given per year and what was the NPA per year? And that percentage is done the average, weighted average we calculate. Then you get the probability of default. But in exam, it will be given to you. I just gave you the background of this. Loss given default. What is LGD? Suppose let's say, see I am explaining you in very layman's language. Suppose if I give you a loan of let's say 10 lakh rupees and I take a security which is marketable, easy security, means let's say I take a FD of 7,50,000 against this. Or if I take a gold of 7,50,000. So I am giving you a loan of 10 lakhs and I am taking a gold against this. Now this is not a gold loan. This is a normal commercial loan. Gold is just kept as a collateral. So now what is my LGD? LGD will be 10 lakhs minus gold price, 2,50,000. So that will be my LGD. So that is the meaning of LGD, loss given default. And what is my EAD? Is it given EAD over here? No, EAD is not there. There are 3 terms, always remember. PD, LGD and EAD, exposure at default. Okay. So exposure at default means the total loan amount with the haircut if I apply. You all have these terms in module B. Okay. So now, economic capital. What is economic capital? What do you mean by economic capital? Everyone. How many of you know this term? Economic capital. What do you mean by this term? Yeah. Yes. See, economic capital means what? See, in bank, what are we doing? In bank, we have a business of taking the risk. We have to take the depositor's money and give it as a loans. So this risk-taking ability requires capital. Whenever I am taking the risk, I require capital. This all comes under the CRAR formula, capital upon RWA. Whatever loans I am giving, okay, see, CRAR, you understand this? Many of you might be knowing this, we have already done this, CRAR. Okay, so that is equal to capital upon RWA. Okay, so this part of capital is known as economic capital. It is basically the capital required to take the risk, to give the loans. So that is economic capital. Okay, so economic capital is given as 12%. So basically it's given as CRAR. Okay, so risk-free rate is 5%. Risk-free means basically FD rate is 5%. Calculate the RAROC. Now if this numerical comes, how will you solve this? Yes, how will you solve this? Everyone, try to solve this. First, I'll give you the steps. Total, there are 5 steps. First, calculate the annual interest income. Okay, first let's calculate the annual interest income. Pay attention, everyone. 5 marks case study. Okay, so first calculate annual interest income. So, annual interest income. First calculate this. What is the annual interest income over here? Look at the case. See, pause the video, go back again. Okay. So what is it given? Commercial loan is of 50 crores and what is this? Interest rate is 8%, right? 50 crores and 8%. Say this. 50 crores. Is it so? 10 crores, sorry. 10 crores and what is the rate of interest? Rate of interest given is 10%. Okay, 10 crores, 10%. So 10 crores, 10%. Find this. Get the answer. 10 crores, 10%. So that is equal to yes, what are you getting? What are you getting? 10 crores and 10%. So it is 1 crore, right? 1 crore. Probability of default is 3%. Everything is given to you. Yeah. PD is given. Yeah. So that is equal to 10 crores into 10%. So that is equal to 1 CR. 1 CR is my annual interest income. Got it, everyone? Annual interest income is 1 CR. Now, what is the next one? Expected loss. What is the expected loss given? Probability of default is given as, let's see expected loss. Let's calculate this. Expected loss. Okay, so that is what is probability of default given as? Probability of default is given as 3%, right? 3% is the expected loss, probability of default. But on what? 3% on what? What all is given? LGD is also given, loss given default, 50% is given. So, kindly note, expected loss is always PD into LGD. PD into LGD. Got it? PD into LGD into my loan amount. Whatever is my this loan amount. So PD into LGD into my loan amount. So 3% into 50% into the loan amount. So find this. 3% into what was it? 50%? 50% into loan amount, right? So 50% into loan amount. What is loan amount? 10 CR. So what is the answer now? Get this. 5 3 is 15. 150% of 150%, right? Yeah. So 150% of this 10 CR. Okay. So that is equal to what? 15 CR. So that is equal to 15 CR. Everyone clear on in this? 15 CR. This is your next step. Expected loss. Now economic capital. What is the economic capital given? Economic capital is always calculated. Economic capital. Economic capital. Very important terms, huh? Economic capital. That is given as what? 12%, I think so. 12% into what? That loan amount. So 12% into loan amount is what? 10 CR? 10 CR. Just check the figures because we are solving so big numericals that you many times tend to forget the figures. Economic capital 12%, right? And loan amount is 10 CR. So what are you getting now? 12%. So 1.2 CR, 1.2 CR, 1.2 crores. So this is your economic capital. Now you will be wondering, what are we doing all this? We want, what is your final aim? REROC. But where is REROC? Up till now you have not got any REROC. Have you got any REROC over here up till now? No. Where is the REROC? Wait. Steps. So economic capital you got it. Now income from capital. What is income from capital given? Income from capital. So income from capital is what? Economic capital, say this, fourth. Income from capital. Now we have come almost to the last stage. There are only 5 steps. So we are on the 4th stage now. So income from capital. Very important term. See, for 1 mark for per element 1 mark. So 5 marks you have. Okay. Income from capital is given as what? Economic capital is 1.2 CR. You have to multiply this economic capital. Okay. So economic capital into what is given? Risk-free rate is given. Risk-free rate is given as what? Risk-free rate. FD rate was given na? 5%. So if I keep this capital of 1.2 CR, instead of giving it as loan, suppose if I keep it in FD, then what is the income I will be getting? So that is equal to 1.2 CR into 5%. What is it? 12 5 is 60, right? 5%, 12 5 is 60. So it is what? 6 lakhs, 0.06 CR. Everything will write it in CR. That's easy, right? 6 lakhs. So 0.06 CR. Now we come to the last step, and that last step is REROC. 5th step is REROC. Remember, 5 marks for this. Okay? So REROC equals to this. You will not get in any of the books. REROC equals to, what is the REROC now? Formula for REROC. Total interest income minus, what is this? My total interest income minus what am I getting? Anything over here? Yeah. Operating expenses are given, 10 lakhs. See, it's very confusing. Okay. So I'll write it over here. Total interest income minus operating expenses. Okay. Minus. See, you have to do calculations. Minus operating expenses minus, what is this? Expected loss. Minus expected loss. Expected loss. Okay. Minus expected loss. Minus, now what is this? Income is there. Plus. So plus your income from capital. 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 Do this everyone now, and the whole divided by your, what is it? Your economic capital. The whole upon economic capital. Capital. So do this calculation now everyone. Do the calculation everyone. Formula I have given. I will give you 2 minutes to solve. Do it everyone now. Solve this. Solve this. Everyone solve this. So what is the answer you are getting? Interest income minus operating expenses minus expected loss plus income from capital, the whole upon economic capital. Okay, the whole upon economic capital. How do you do this? Simple calculation. Do it. Let's do it. Let's do it jointly. Okay. So that is equal to, now should we do it on the next page? Yeah, let's do it on the next page. It won't be visible over here. One second. Let me bring in a page over here. Okay, just wait for 1 minute. Because you need to understand this topic. That is very important, isn't it? If you don't understand it, just rectifying is of no use. So now, let's move on. Now we have a new slide. Okay. So now, this pure over here. Now we have to solve the second part. So this REROC equals to interest income. Write down all the income. See, write this down because I will be changing the slide now. Write this down everyone. Pause the video, write this down. Okay. I will be changing the slide now. So interest income. What is the interest income? 1 CR. Minus operating expenses. Those are not given over here. Those are given in the numerical. Operating expenses are 20 lakhs. So 20 lakhs what you do? You write it in crores. 0.2 CR. Always bring all of them in the same unit. Crore, 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 crore. That's simple to understand, isn't it? So now, this 0.2 minus what is this? Expected loss. That you got it over here. 15 CR. Right? And plus income. Got it? So write it down. Everyone get the calculation. So REROC equals to interest income was 1 CR minus, what is the second one? Minus operating expenses. What are the operating expenses? 0.2 CR. So minus 0.2 CR. 0.2 CR minus, what is this? Something more is there. Expected loss. What is the expected loss? 15 CR, right? So 15 CR. 15, or is it 3 into 10 CR? Yeah, 10 CR is the interest income, 1 CR, yeah. Minus expected losses 15 CR, correct. So this overall project will be in a loss, 15 CR. So do this 15 CR minus 15 CR. It is huge, 15 CR. Okay, plus something is there. What is plus? Income from this. So income is what? 0.06 CR plus 0.06 CR. The whole upon, what is it? The whole upon economic capital. What is the economic capital? 1.2 CR upon 1.2 CR. Do this now. Let me check if there is some problem over here. 4 CR, this is 1 CR minus 15 CR is what? Expected loss. 1 second. What have we done? This 2. $60 lakhs and 60 lakhs. Some error. This 15 CR is a big. Let me check this. Let's check this because this is very important. 3% into this figure is wrong. Okay, that's what. This figure is wrong. So what is the figure for this? Let's do this. Okay. It's very important that we do it on the calci. Always remember, we should do it on the calci. See, I did this and immediately everything went wrong. Do it on the calci always. Okay. What is this? 3%. Percent means what? See, I'll write it over here. 3% means 3 upon 100. 100. 50% upon 100. And then do it now. Now you'll get a different figure. That's what I was wondering. How come this happen? So 3 upon 1, or you directly multiply it first. 3 into 50, 150, right? So 150 into 10, let's do it later, 10 CR later. 150 upon, what is the, how many zeros? 4 zeros. 1, 1, 2, 3, 4. So 0.015 into what is this? 10 CR. 10 CR means, let's keep it CR only. So 0.15, that's what, 0.15. That's what I was also wondering, how come you are getting 15 a loss as such? So 0.15 CR. Got it everyone? 3% into 50%, 3 upon 100 upon 50 into 50 upon 100 into 10 CR. Again, never ever try this manual calculations in the exam. Even you are the best problem solver, you will always go wrong. So do this for 0.15 CR. Got it? So now write this 0.15 CR. 0.15 CR. Let me rub this now. Okay, even I got confused. What is this? How can this happen? So 0.15 CR. Now get the answer. Okay, now you'll get it correct. So 1 minus, let's write this, 1 minus 0.2 minus 0.15 plus 0.06. So that is equal to 0.71. 0.71 divided by, see, I'll write it down. So REROC equals to 0.71 upon 1.2 CR. Okay, 0.71 upon 1.2. Both are in CR. So 1.2. So you're getting it as 59.5916. So 0.5916. So in percentage it will be 59.16%. This is your REROC. This is your REROC. Very, very, very important term. Okay, very important term, REROC. Now, what is the meaning of this REROC? What is the use of this REROC? Can anyone tell me? Why did I find this REROC? What is the use of this? Who can tell me? Suppose if I am getting this REROC, what I have to do with this REROC? I have to compare this REROC, see this, because only problem solving is not important, you need to understand also. So I have to compare this REROC with the hurdle rate versus hurdle rate, hurdle, HURDLE, hurdle rate. You have to calculate this REROC versus the hurdle rate. What is hurdle rate now? What is hurdle rate? It is the minimum rate which I am expecting from any project. Minimum rate which I am expecting from any project. So what can I call this? You have studied this rate, but only you don't know. You have studied it with different name. That is called as IRR. IRR, internal rate of return. Remember this now? IRR you all know. NPV equals to 0. Then whatever figure you get is IRR. So you have to compare this REROC with IRR. So this was a case study. So big, right? Now these case studies, if they are asked, they will be asked for 5 marks in the exam. They are not that simple. Okay? IRR, NPV, you have to go through the basics of your banking again. You have to go for JAIIB again. You have to come to CIB again. Because IRR you had it in your JAIIB, NPV IRR. But then also, they are being asked over here also. In CIB, they expect you to know the JAIIB also. Although you might have given this exam very far off. But then also they expect you to know that. Okay? Because these two are blended courses actually. JIB and CIB are combined ones. Whatever is taught in JIB will never be taught in CIB. They expect you to know it and then move ahead. Okay? So now, before going, everyone kindly note, join the Adda 24/7 batches ASAP. All the numericals, objective questions, case studies, everything is covered. Okay? And we are starting with the pro batch. Okay? This ACE batch. Latest one we are starting. Say this, ACE batch. This ebooks, mock test, online live classes, recorded sessions, everything you are having. And importantly, remember, you are having a huge discount offer right now. See, this discount offer is click on buy now, put the code Y432. Y432. Never forget this Y432. 79% discount plus 1% extra, 80%. How that 1%? Through the app. So 80% extra you are getting. 80% discount you are getting. 80% discount plus recorded sessions, okay, plus live classes, ebooks, mock test, everything. You can join the Mahapack also. Mahapack is one of the best tools. See this Mahapack. Okay, CIB Mahapack. You join the CIB Increment Mahapack. See this. You are getting double validity right now. You buy for 6 months, you get it for 12 months. Buy for 12 months, you get it for 24 months. Double validity. Plus 80% off is already there. Plus 15 plus batches per subject. 15 plus per subject. Huge it is. Okay. Ebooks, mock tests. Physical books are available in this. Physical books, question banks. Plus formula bank. Plus your planning sessions. Means how to study. Everything is available. But never forget the code again. Y432. Y432 code will give you the maximum discount and its double validity. Okay, don't miss this. So bye.